All right, so this is a video explanation of the trade manual, and I'm just going to walk through, and then we do a bit of chart work, and we see where we go from there. So PHLS simply stands for previous high low strategy, right? So it's a play of support and resistance, and also a bit of what is known in the trading circles as turtle soup. All right. If you don't know about it, you can go read on turtle soup. So it's a bit of a mixture of many other things, but then it's basically the high and low of the previous day or the previous week. And so the strategy is based on previous key levels. The key levels to look out for are the previous week high, the previous week low, previous day high, previous day low, and then we can also have a look at the previous session high and low. Previous session high and low means if I'm trading London, I should look at Asia's high and low. If I'm trading New York, I should be looking at London's high and low. All right, and we have specific parameters by which we determine our high and lows or our trading sessions. All right, we make use of a certain indicator called weekly high low or previous week high low, and that's what draws out the purple line for us. Okay, so it draws out the previous week's high and then the previous week's low. And then for the previous day's high and the previous day's low, we mark it out ourselves by using the line tool, the horizontal ray tool on TradingView. So we just put it there ourselves to give us a visual landmark of sorts to be able to follow. So all trades are monitored and executed on the 5-minute chart. So we don't really bother ourselves with what's going on the 4-hour, on the hourly, on 30 minutes even. We are just looking at the 5-minute charts. The reason is we want to avoid bias. Right? There are times where the bias generally might be in one direction, but 5 minutes is showing the other direction, and the 5 minutes will still play out before the bigger time frame one comes in. So in order to avoid the confusion or in order to avoid analysis paralysis, we just try to avoid looking at the higher time frames. So I did mention there are two indicators that we make use of. One is to show the previous high and low levels, and then the other is to show the trading range per session. All right, and then we use different colors for easy reading, and then we mark out our high and lows of the day session, and we also mark out high and lows of the previous session. So during our trading session, we are waiting to see price to get to one of these levels, either the weekly high, the daily high, or the session high, or weekly low, daily low, or session low. So these are the areas that are key values for us. And then the willingness to move in a certain direction. Now this willingness will be shown in price momentum, how strongly price is moving, or the chart pattern, what chart pattern is being drawn. So it gives us a trade bias, and then we look for entries in that direction. And this is just a caveat, it's an add-on. That's usually the first 15 minutes of a session create a range between the lowest point in dips to the highest it reaches. And for the London session, that's for our peculiar time zone. This range happens between 7 a.m. to 7:15. For New York, 12 to 12:15. And then this range gives a prime area for us to have the best risk to reward. Okay, now here are the entry criteria. Price forms an order block or chart pattern on the 5-minute that confirms the trade bias. The entries on the close of the order block and the SLS at the opposite end of the formation. So this is what we are going to focus on in this video, this particular entry criteria. Okay, so in this screenshot, we are seeing that the pound USD on the 5 minutes just before the opening of the London session. We trade our London session between 7 to 10 a.m. So just before the open, price had broken this weekly level and then gave us this chart pattern. This is a bearish, bearish, which tells us that we are looking for more sells, and it's also playing out within the first 15 minutes range. You realize that that range is a deeper shade of blue. All right, and it's happening within there. So that's like a double confluence, no, actually triple confluence for us. One is happening around the key level, two we are seeing a chart pattern, and then three is within the 15 minutes range. And then we took that trade, and then we get our TP of 3%. All right, and then you can see the SL is at the end of the chart pattern. All right, so we move on to the next. Now on the next is also the British pound. Price had trickled all the way down, triggered the previous day's low, come up, and so all this while we know that our bias is to the upside, because price has triggered the low and has started moving in a certain direction. All right, so we are just looking for a way to enter, a safe way for us to take an entry, and then we see this chart pattern of bullish, bearish, bullish. Okay, so we are taking that entry at the close of this candle, our stop loss at the end of the pattern candle, and then we get our 3% here as well. So that is how it looks like when we are taking it off the previous day's low. And then the previous session. Right, so as I mentioned earlier, our sessions for London are between 7 a.m. to 10 a.m. and then for New York it's between 12 p.m. to 3 p.m. So we trade in 3-hour blocks. So we see price trigger the previous session high, come down, and then go above it again. And if you notice, there's a weekly high here, and price was moving above it. If price should have been moving below it, we should be looking for sells, but it's moving above it. So our bias is more of buys. Anything can happen, but our bias is more of buys. And then additionally, price keeps moving to the upside, and then now price comes to break the previous session high in its movement to the upside. So we are having multiple confirmations for why we should join momentum to the upside. And then this is our entry pattern, very, very beautiful, right on the previous session high. You're having a bullish, bearish, bullish, wonderful momentum, strong bullish candle. We take our entry at the close of the bullish candle, our stop loss is at the end, and then boom, all the way back to the previous day's high. I usually use white to denote that, so I could tell that this is the previous day's high, just straight up. This on Euro card 5 minutes candle, beautiful, simple trade, and then we go. You should hit TP by the end of the session, so by 3 p.m. you should be done with this trade, and that's the way I like it. Just short and sweet. Within 3 hours, you know what you are getting. It's not like you're not going through that agony of staying in a trade for hours, having to sleep with it, with exposure still on. No. With this, by the time the session is ended or shortly afterwards, you know whether it's hitting TP or it's hitting your SL, and then you are done for the day. Your risk is concluded for the day, and then you look forward to the next trading day. All right, so for the purposes of context, the risk will usually be 5 to 10 pips, and then the targeted reward is 3 times the risk. That is what I go for. So either I'm going for 3 times the risk, or if I see a key level around around 3%, 4%, 5%, I'm looking at that. So a key level or 3%, but 3% just for consistency's sake, just makes it repeatable. That's what we are looking for. Simple, repeatable actions that we can come to each and every trading day and do the exact same thing, that over a period of time, over a series of many trades, hundreds of trades, we know put us in the positive. All right. And then to manage risk conservatively, take partials at 2%, and then move the SL to the entry, and then the rest of the position we leave to run to full TP at 1:3 RR. All right. So this is my trading plan. You can, depending on the pair you choose, you can modify this, you can alter this for the best suit the pair you are trading. All right. And as I said, this is conservatively. Aggressively, you might just leave it. So either TP or SL, you just let it go. So traders with a higher risk appetite can set and forget the trade. So it goes to either TP or SL. Simple. All right. So let me go to the charts and then we see what goes on there too. Okay, so this is a trade that occurred on the 26th of January. That's on Friday, 26th of January. I'm going to zoom out so you see the entirety of what was going on here. So this is the entire Thursday range. All right, this is the entire Thursday range. If I am to put the levels, this will be Thursday's high. I think I can just write on it so that Thursday high. And then we also have another one here, and that's Thursday low. Okay, so this is a Thursday low. It's what we are looking at moving into the new trading day. All right, so realize that on Friday the Asian session was a bit higher, then it went all the way down, triggered Thursday's low, the white line. Don't get lost, this white line, probably even deepen it for you. Good. So it came to trigger this white line and it started on the way upwards. All right, triggered, it started on the way upwards. Now what is beautiful about this particular trade is that it gave multiple entries, like it gave multiple opportunities for someone to take the trade. Now the first one was this bullish, bearish, bullish. All right, and the price is closing above the white line, above the a weekly high, sorry, a weekly level. All right, weekly levels I denote with purple just to make it visible. So a purple, so price is above this, so it's safe for me to take a trade here. So this could have been a possible entry, and then right after that we get the same thing again. All right, another entry. Let me just draw it so you can follow how your stop loss would have been. So this could have been it, a 6.2 stop loss on this entry stop loss. An aggressive trader might decide to go for this because realized price never came back, but I feel this is fine. All right, and then another entry is this. All right, on this particular candle, on this white candle. All right, okay, so this is another entry again, and then right after another entry again, possible entry, right after another entry again. So that is what, 1, 2, 3, 4 possible entries that even if you miss this, maybe you're scared, you're skeptical, okay, maybe it's not really a buy. You see this again, come on, by the third time you should be convinced that price is moving to the upside, and then just join. All right, just take the risk. It's 1%. Just take the risk, see what happens. All right, and then we go for the full 3%. Wonderful. Now this particular trade was really interesting because it went all the way back up to the previous day's high that we denoted there, all the way back up. So you see, when price is triggered from the previous day's low or weekly levels, it usually gives bigger range. So this could go for a full 10% on a single trade. 10%. This doesn't always happen, but it does happen. So keep a lookout for it. Maybe probably leave a small position just to see how far it goes or something. For our sorry about that. For our initial entry, it would have had 9%. So this is about it. All right, this is basically what we are looking at. Price triggering the previous day's low and then reversing, or the previous day's low and then giving us an entry criteria for us to follow the trade through to our TP. Yeah, so that's it. If you have any questions, you can just drop them in. I'll see how best to address it. Thank you.